What's up, YouTube? Today we're talking about Rocket Lab's stock. If you've watched this channel before, you know I share my portfolio. You know Rocket Lab is one of my largest positions. I'm going to show you my entire portfolio in just a second. Today they just announced that they won another huge contract with NASA. We're going to talk about that, and then I'm going to run you through 3 price scenarios with a low, a medium, and a high buy price for a bear, base, and bull case scenario on what the next 10 years might look like. And then I'm going to share some examples of some other stocks, Tesla, TransDigm, and Intuitive Surgical, that were companies in new and upcoming industries. They had a disruptive product or offering, and they've all worked out to be massive success stories. Now, this doesn't happen all the time. In fact, most of the time, high-risk companies like this end up being failures. So keep that in mind. There's a ton of risk involved with investing in these types of stocks. I'm not a financial advisor. This isn't financial advice. And most people are better off just owning simple index funds like VOO or VTI or something like that. I need to know if you like my new sweet special effects in the background. I got some new lights. Do you like them? Do you not like them? What color should I go with? Here's blue. I could set it to a Miami theme, which gives some blue and purple or pink. Let me know what you think about the lights. If I should just go back to normal, let me know down in the comments. All right, I'll do a full portfolio update at the end of the week. I do it at the end of every week, so if you like that type of content, make sure you like this video and subscribe to the channel so you never miss an update. That also helps more people find the channel, so it supports the channel. But here's my portfolio, right? $114,000. I've put $132,000 in, so I'm down $18,400, and we started this thing February 15th, 2022. Here are my positions. I've had 0 changes this week and really have just kept the same stocks for a while now, but want to show you that I own Rocket Lab. It's an $8,800 position. I'm down about 15% on it. So keep that in mind as I talk about Rocket Lab stock. Obviously, I'm excited about the stock. I own the stock. All right, here's the news of today, and then we're going to get into my updated pricing scenarios for what I think the low, medium, and high buy prices would be for Rocket Lab stock. All right, the stock's up 6% after hours after a NASA contract for TROPICS mission launch. They have some of the craziest names for these launch. They had Capstone and TROPICS. If you look back at my channel, I've been doing a lot of videos about Rocket Lab. I talked about the Capstone mission, which was a huge mission, a milestone mission with NASA. And I said when that went successful that they're likely to see more missions and more contracts follow on, because launching satellites into space is a hard thing to do, and when you find a contract or a company that does it well, every successful launch earns credibility and probably earns repeat business, and that's what happened. So the company was selected by NASA to launch the time-resolved observations of precipitation structure and storm intensity with a constellation of small sats, TROPICS. I swear they name these things just to have cool names, right? TROPICS. I think they come up with the acronym and they're like, what words could we come up with that and still kind of describe what this mission is? The mission is part of NASA's Venture Class acquisition of dedicated and rideshare launch services contract. Rocket Lab will launch the TROPICS mission, which is part of the Earth System Science Pathfinder program, into its operational orbit within a 60-day period. TROPICS mission consists of 4 CubeSats and 2 low Earth orbital planes, which will launch on Electron rockets from Launch Complex 2 at NASA Wallops Flight Facility in Virginia. And if you've been tracking, they are just starting launch operations out of that, so that's great to see, more business at that launch site. Launches are scheduled to take place no earlier than May 1st. Here's kind of the purpose of that whole mission, right? The constellation targets the formation and evolution of tropical cyclones, including hurricanes. It'll provide rapidly updating observations of storm intensity, as well as the horizontal and vertical structures of temperature and humidity within the storms and in their surrounding environment. These data will help scientists better understand the processes that affect these high-impact storms, ultimately leading to improved modeling and prediction. So you're talking about the potential for, saving lives here, for better insurance evaluations, better, communications and letting people know, hey, you need to evacuate or not. So these are big deals, right? I've done a couple videos on Rocket Lab, but if you just want to look at the metrics, right? I mean, this company has grown revenue at an exponential rate. Now, granted, it's from a very small base and they still don't have that much, but that means there could be a lot of growth potential ahead. So back to September of 2021, they only had $5 million in that quarter of revenue, jumped to 27 million, and then 40, and then 55, and then 63, and then estimated in this upcoming quarter 55. But then they're expecting continued exponential growth over the next few years. So analysts are basically expecting a 50% compound annual growth rate from 2022 all the way through 2026. ending at only $1.1 billion in annual revenue. And the company says that they think their total addressable markets between launch services, space systems, and space applications, which again, I talked more about Rocket Lab in previous videos, they think the total addressable market is over $300 billion. Now take that with a grain of salt, but still, it's a huge total addressable market no matter what way you look at it. And by 2026, these estimates only take us to 1.1 billion. And so, it's not unrealistic to think that this company could 10x, 20x, 30x its revenue over the next decade to 2 decades or whatever. And so the point is, there's a lot of revenue out there. Now, a lot could go wrong. A lot has to go right for this to work out. But it's a very small company with a lot of revenue upside, which again means there's a lot of risk as well. The company is still unprofitable, but they're making great progress towards profitability. Gross margins are improving as they introduced more space systems revenue instead of just launch services revenue, which is actually launching satellites into space. That's a lower margin, lower income type business versus the space systems and then the future space applications, which is going to be much higher margins and more profitable lines of business. And so analysts pretty much have it modeled to be profitable in 2025, right? So we're still a long way out. What I've done is I've put a low, a medium, and a high scenario. You're familiar with this if you watch my videos, and I've actually done a 10-year analysis on this, right? This is a long time. So a lot can happen between now and then. The way I did this was I used analyst expectations, right? The middle line is basically what analysts are expecting. And then I wanted to build a low side, which is down to 30% revenue growth instead of 40%, which is what analysts expect over the next, 5 years. And then on the high side, 50%, because sometimes companies do better than expected. And if you think they can't grow revenue at 50% for 10 years, I'm going to show you 3 companies that have had exponential revenue growth over not just 10 years, but 15 and 20 years as well. Then profit margin, we have 12, 15, and 18%. Free cash flow margin, 13, 17, and 20%. Again, this middle line is based off analyst expectations. And then a PE of 15, 20, and 30. And this would be the PE 10 years from now. Remember, still a small amount of revenue compared to what the total potential revenue could be for them. Price free cash flow, 15, 20, and 30. And then desired annual return, I usually do 10, but because this is a higher risk stock, I did 15. We're going to hit analyze and it's going to spit out the prices, the low price, the medium, and the high price you would buy this stock at today if you think these scenarios will be true 10 years from now. And what we could see is that on a PE basis, it is overvalued. You would not be willing to buy it over $3.43 a share, which is down, 20, 30% from here. In the middle scenario, you're looking at 1058, which that's the analyst expectations currently. At a high scenario, you'd be looking at 3466, so a lot of upside there. Now, what I'm going to do is I'm going to add a reminder to myself to get alerted if it goes below 343. That's where I'd really want to consider adding. So I know what you're thinking. 30%, 40%, or 50% revenue growth over the next 10 years? No way, that never happens. Well, let me show you 3 stocks. They're all in different industries. Intuitive Surgical, which is kind of like a medical robotics device company. Tesla, everybody's heard of Tesla. And then TransDigm. TransDigm is a aero parts manufacturer that provides the air industry with a lot of small parts that they need for aircraft, right? And you can see how much these stocks are up since 2010. Intuitive Surgical's up 604%, Tesla's up 11,000%, and TransDigm is up 1,100%. That turns $10,000 invested into each, Intuitive Surgical into $70,000, Tesla into $1.1 million, TransDigm into $120,000. These stocks are volatile, right? Look at how many times they've been down 60%. How many times they've been down 30%. A lot of them, they've been down 40% several times. So with high risk stocks like this, they are very volatile and a lot of them never work out. I can't, say that enough in this video. But let's take a look at what their revenue growth has looked like. This is Tesla since 2010. So over 12 years, 2010 to 2022. Their revenue growth has grown from $413 million to $83 billion. That is a 73% compound annual growth rate. Net income has gone from negative $149 million to $7.6 billion in 2021 and estimated $14.4 billion by the end of 2022. So remarkable, right? TransDigm, a lot less popular than Tesla, right? But since 2006, they've grown revenue from $435 million to $5.4 billion. So that's more than 10x revenue growth from 400 million to 5.4 billion. And again, I mean, net income, they were already profitable, but you can see how much net income has increased as revenue has grown as well. Intuitive Surgical, again, growing revenue from $227 million in 2005 to $6.2 billion in revenue. That's something like 20 or 25x revenue growth in 12, 15 years, something like that. 21% CAGR. So again, net income has gone from $67 million to $1.7 billion. And that's what companies 5x, 10x, 15x, whatever is massive upside and starting at a small base when they're the most risky, right? And then massive growth in revenue and earnings and income, improving gross margins. And so the point is, these are very risky bets and most of them don't work out. So for investors, it's smart to keep the amount of risky bets like this limited in your portfolio, whatever that means to you. And then as always, I never invest any money that I might need in the next 3 or 5 years. We keep a savings account. I don't use margin. I don't do crazy options bets. I'm truly trying to be a long-term investor. I understand the risks associated with my account. And I realize that most people are better off just investing in index funds. So even with all of that, the odds against me, I still choose to invest in individual stocks, but it's not for everybody. But I feel great about owning Rocket Lab. I'm going to continue to own my shares, and I hope to own shares for 5, 10, 15, 20 years in this company. And I hope that it works out and becomes a massive winner. But if it doesn't, then I'm prepared for that as well. And I'll monitor it along the way and sell shares if the thesis breaks and the company stops performing.